What's up guys? In this video, I'm going to go over 3 key steps to financing your very own small business. For more videos like this one, hit that subscribe button. But for now, let's go ahead and get into the video. What's up guys? It's Jay and welcome to Flashpoint, where we're all about credit cards, and other finance tips. If you're new to the channel, please consider subscribing. Hey, subscribe, hey, subscribe. I tried, at least, right? So, one of the worst things that can happen when running a business is ending up in a cash flow crisis. So, in order to avoid this, it's critical that you have enough funding from the very beginning. So, step 1, you want to make sure that you develop a solid business plan. A business plan is usually required reading for anyone considering handing you cash or credit to get your small business started. So, you want to begin by presenting your business idea to potential lenders or investors. Step number 2, you want to make sure that you understand key financial factors. Make sure that you're completely aware of the resources that exist for financing a new small business. First, we're going to start off with equity versus debt, because business financing comes from either equity or from debt. Debt financing refers to a loan. This is usually money from a commercial bank or another source, where there is a definite timetable for repayment. Equity financing from investors usually requires sharing part ownership. Whoever the investor is will receive a cut from future earnings as well.
Working with us, we can go with the $450,000 and $80,000 in salary, and we would give out 35% equity in the company.
I would do, as Lori suggested, or $450K for 35% plus the $80K guaranteed for 3 years, but a 10% royalty till we get our money back.
I'm good with that.
Next, you want to make sure that you understand control. Most times, many small business owners need to give up some control in order to get that financing. So it's important that you think about how much power you will agree to give up in order to get that financing. Next on the list, guys, is going to be security. So how will the investor or the lender acquire the capital? If you fail to pay, who do they go after in a settlement? Can they file a lien on your property? And lastly, for number 2, guys, is going to be other factors. There will be financial, tax, and legal factors to consider. So just be sure to consult with your CPA or your tax advisor to stay informed on the consequences. And finally, guys, for the 3rd key factor, you need to determine where you will get that financing. So one option to get that financing is commercial banks. This is the obvious choice, but before you apply for a loan, you want to make sure that you get your business credit report and go over it carefully, just in case there may be some inaccuracies in there. The second option, guys, you can always get venture capital firms to invest in you. There are many people out there that do invest in small businesses, but if you choose this route, just make sure that you know that you will almost definitely be giving up some control of your company. So make sure you know how much control you're giving up before you sign anything. But if all you think your product needs is just an amazing ad campaign, then this may be the perfect route for you. Another option, guys, is friends and relatives. I strongly advise against this though, just because you know how relationships can get ruined if you're not able to make a payment to that family member. But if you're able to keep it professional, I advise you to be more detailed by signing and notarizing a written agreement and payment schedule. Another option, guys, are small business loans from the government. These are limited, low-interest loans for expansion plans. Government agencies such as the Small Business Administration provide discounted rates for small businesses to create jobs or to help with development plans. Next up, another option would be retirement funds. Borrowing against a 401k or an IRA are often used to fund startups. I suggest talking with your tax accountant of the advantages and disadvantages of this option though. One downside to that is that the money that is taken out will not increase tax-free until the money is put back in there. And finally, guys, the last option for trying to get financing for your small business is obviously credit cards. This can usually be a big time saver when you're starting your small business. But Failing to manage your credit card debt is often the beginning of the end for many American small businesses, unfortunately. With all that being said, guys, no matter which route you choose to take, just remember that your credit worthiness will be evaluated. As an entrepreneur, you may be determined to get your business up and running, but taking these important steps should allow you to find a solid mix of financing options. And that'll conclude today's video, guys. For more video updates, hit that subscribe button. If you found this information to be helpful, give this video a thumbs up. I really appreciate it. Share it with your friends. Drop a comment down below to let me know where you guys are on your entrepreneurial journey. Don't forget to hit the bell notifications down the bottom left corner so that way you guys can stay up to date for whenever I drop my next video. Be a good person, be safe, be smart, and remember, credit is your life. Peace. Drop a comment down below to let me know what you guys thought.